And so we started with 1,000, then we went to 10,000, then we went to 100. So I think this halving goes to 100,000 will be the fair value.
That was Mark Yusko, Managing Director of Morgan Creek Capital Management, giving his thoughts on what he thinks the fair value for Bitcoin will be after the next halving. And that's not his price prediction, that's just what he believes the fair value will be. So in today's clip, we'll be checking out Mark Yusko's recent interview where he talks about Bitcoin, the Bitcoin ETF. He gives an updated Bitcoin price prediction. Make sure to stay tuned for that. And where he sees this space going over the next couple of years. He talks about some pretty interesting things in today's clip. And if you guys are new to the channel, please consider subscribing. We have new Bitcoin, crypto, finance related videos coming out every single day. And leave your thoughts in the comment section below. What do you think about what Mark is saying in today's video? Let's go ahead and play the clip here.
You know, I can't remember the exact date, Michelle, but I felt like it was sometime post Labor Day where that application, if I go back, it was June 15th. Mm-hmm. So I think the 90-day window would be September 15th, right? So my guess is that's when we'll find out for sure. Now, could they push that, as you said, into January? Certainly. And I think they will, again, they being the SEC, will determine the political wins. You know, the squall that we talked about, you know, last time we were together of Hurricane Sam has calmed down a little bit. I think it's going to heat up a little bit. You know, we're heading into hurricane season here in September, so it's likely that could heat up again. The trial date is set for October, theoretically. So, look, I wouldn't be surprised at all if they pushed to January, but look, being first matters a lot. And that's why I believe BlackRock's going to be first. And look, I've been saying that for a while, for over a year. And, you know, people poo-pooed it at first, and now it seems increasingly likely. You know, look, when Larry Fink, arguably one of the most powerful people in the world in terms of financial concerns, goes on television and says, look, this asset is not going away. And hey, it actually might even be a good place for you, the little guy or gal, to protect your assets against devaluation of the currency. I mean, my eyes rolled back in my head. He said that out loud. I mean, yeah. I know we all think it, we all know it, but wait, we're the conspiracy theorists that talk about that, not, you know, well-respected members of the community and the inside saying it. That was something. Well, no, look. There's a limited supply, and the supply isn't just limited by Satoshi himself, right? To 21 million, which isn't 21 million because it's less because there's lost and stolen, but it's not that limited supply. It's the fact that there's so many people who will never part with their Bitcoin, either because they can't, the Satoshi wallet can't move because it appears it was a multi-sig and at least one of the people has passed away. And or people just don't want to sell. You know, Dan Held, I love his last name, right? He's not going to part with his Bitcoin, no matter what the price is. So he's just not going to sell. So the free float of the network is really small. And so everybody says, well, you know, it's $30 trillion market that is advisors that use ETFs. All right, let's say they do 1/10 of 1%, $30 billion. That's not that much. That's not going to move the price of a, you know, $500 billion asset. It's not a $500 billion asset, a free float. Free floats, maybe 100 billion, maybe. So 30 billion on 100 billion, price is going to go up. But it might not be 1/10 of 1%. What if everybody did 1%, which isn't even outlandish, given it's the best performing asset last 3 years, last 5 years, last 10 years, since inception, 14 years. So if I'm an investor or I'm a fiduciary of investors as an RIA, I might have to put some percentage in Bitcoin if everyone else is doing it. So at that point, what if it's 1%? Now we're talking 300 billion on 100 billion of free float. That's a big move. Big, like huge. We've seen this movie before. And, you know, history doesn't repeat, but it rhymes. And it wasn't an ETF, but it was GBTC, the trust. So in the last period, 2017, 18, GBTC kind of came into existence, and we saw the price go from 10,000 to 60,000 when fair value was more like 20,000. And that was a crazy move, but it was, again, supply and demand. And then it fell, and then it rebounded back up all the way back to 69 before the bear market, which coincided, by the way, with the approval of the futures-based ETF, which I will argue was absolutely intentional, to depress the price ahead of the forecast approval of the spot ETF. Look, here's the thing. Remember the gold ETF? The gold ETF sat waiting for approval for 3 years. Now, why did it take 3 years to approve? It's a great product. Lots of people use it around the world. Why did it take so long to get approved? Well, some would say because JP Morgan didn't want it to be approved. And if JP Morgan doesn't want it to be approved, it's not going to be approved. And so why didn't JP Morgan want it to be approved? Well, and this is not speculation, I'm not making an accusation of anything that hasn't been, documented, and they pled guilty. Actually, they didn't say guilt. They paid a fine without admitting guilt last year for almost $1 billion for spoofing the gold market.
Yeah.
That's fact. That's not fiction. That's not slander. That's just fact. So they are short a whole lot of gold. And once they got short the amount of gold they wanted to be short, they're like, hey, I mean, someone on the other side. So fine, you can have a gold ETF because they'll be the long to our short. Good, works. I think same thing happened here. There was all this rhetoric about the market's too volatile and too unregulated and too easy to be manipulated. Are you kidding me? How about these triple leveraged VIX ETFs that have lost 99.99999% because they're just silly? They're stupid. They're totally manipulated. They're totally bad for clients. And the SEC let those get approved day and night because they're very profitable for the companies that issue them. That said, there was all this rhetoric that we can't have a Bitcoin spot ETF. Oh, but we can have a futures ETF. Well, what does a futures ETF allow you to do? It allows you to create paper assets. And anytime there's an imbalance of paper assets to physical assets, think oil, think natural gas, think wheat, think anything, you can get these big spikes and big crashes. And that's exactly what happened. So people were able, $1 billion flowed into the futures ETF. Well, for every long, there has to be a short. Well, who would be writing those naked shorts? Maybe the same institutions that now are going to get approved to go long at a lower price. Magic. But I have a logic for where I think the price is going to go and why I think it's going to go there. And I certainly think that the spot ETF is going to impact this. But the primary reason for the movement in the price is the halving cycle.
Which
so
is
the halving
April,
cycle is really one of the most genius ideas that I've seen maybe in my whole career. And that's a big statement, but it really is. And what do I mean by that? I mean, markets are not prone to movement, right? They only move if there's excess demand or excess supply. Now, there's never excess buyers or excess sellers because for every buyer, there's a seller. For every seller, there's a buyer. But there can be more people with a proclivity to buy or proclivity to sell. And that does have a directional impact on markets. Like if boomers are, like myself, are in an accumulation mode for the last 20 years, there's going to be an upward price momentum for stocks. Because every 2 weeks, we're throwing money into our 401k and 403b mindlessly, blindly, and that has to buy the same 7 stocks, which is why they keep going up. As those boomers start to turn 71 and a half, which is now going to start to accelerate, there'll be net outflows. So you're going to have to find someone to replace those outflows with inflows, and that's going to be a tough call. So maybe there'll be downward pressure in the future. So my point on Bitcoin is the halving, it guarantees movement. And why is movement important? Well, and what do I mean by that? Meaning, I'm a miner. If I were a miner, I bought a bunch of machines. I put them in the room. I plugged them in, and I rent that computing power to the network, to the Bitcoin network, and I get paid block rewards. Block rewards are the payment that I receive for providing compute. And my costs are fixed, my electricity is fixed, my machines are fixed. If suddenly, which is in code every 4 years, my rewards get cut in half, I'm out of business, unless the price rises. So what has happened in every halving so far, the price adjusts to make the miners whole. That makes sense. Well, if the price doubles, right? Because the block rewards fall in half, so the price has to double. Well, if your price doubles, what does that do? Well, that attracts speculation. And if speculators come in and then leverage comes in, the price will go from a linear increase to a parabolic increase. And we've seen that every single time. So I can look at what the fair value is of Bitcoin using a Metcalfe's law model. And Tim Peterson has the best one, and I just use his. And it would have told me that in 2017, the fair value was $10,000. So when it hit $20,000, it was destined to go down. And it did, all the way to $3,000 because people got overly pessimistic. And then it rallied, and I could see that the fair value in 2020 was $30,000. But we went to $69,000. So it was going to go down. So I believe fair value today is 55K using that Metcalfe's law model. I believe that every halving 10x's the total value of the network. And that's just because the number of people and the way Metcalfe's law works, and there's an exponential growth factor. And so we started with 1,000, then we went to 10,000, then we went to 100. So I think this halving goes to 100,000 will be the fair value. So fair value will accrete from 555K today to, by the halving next April, May, call it June. So let's call it middle of summer next year. $100,000 will be fair value. But we won't go to 100,000. We will get to 100,000, and then we'll have speculation. Now, how much speculation? Depends on the approval and the timing of the approval and where we are in the adoption cycle and how much of that 300 billion is coming in. It depends on the amount of leverage that allows people to increase their buying power. And I think the leverage will be lower this time. And so let's say we blow through that 100K and we're at 150K. That seems reasonable to me. So somewhere between 100 and 150K.
By middle of 2024, after the halving in April.
That seems like a rational response to the halving and to the potential increase in demand from a futures or from a spot ETF.
And thank you for watching all the way to the end of the video. Like I said earlier, make sure to leave your thoughts in the comments section below. Appreciate you guys watching all the way to the end of the video. Subscribe for more, and I'll see you in the next one.